You've both been around a lot of cycles. Does this feel like 2020, 2008, 2000, 94, something else? Like, does it feel like anything you've seen before, John?
Well, I go back to 1987, so I've been through.
Okay. That's not a great one.
Yeah, the stock market down 22% in one day, and that was just a horrific experience. It has a lot of similarities where you feel the fear wherever you go. People are talking about the markets, telling you they're getting out of the markets, they're going to be more cautious and conservative. So that sounds very, very similar and feels very similar. The angst in the morning, watching and wondering what's going to happen that day. I just think the difference is this time is somewhat, you realize one person can change it all overnight, and that's the part that's unusual and very unique.
Yeah. I would say, so I started my investing career in 98. I would say we're in the late 90s, early 2000s. So a combination of higher interest rate environment like you had in that era. Inflation really hadn't been fully tamed by the early 1990s. You had whiffs of that as well. And just like we have geopolitical conflict today, we had geopolitical conflict in the early 2000s as well with the Iraq War, and Iraq War won in the early 1990s. So and then it also, I would say, excess valuation in tech markets and kind of a long bubble bursting, and there might be some of that in the markets today too.
If we are heading into a recession, for purposes of this question, and you each have a blank check, you can only buy one asset, one investment, what would you buy?
Well, there's one investment, my favorite stock that I think will do well in any kind of economy is Madison Square Garden Entertainment. Yeah. If you watched the Knicks game the other day, the stadium is full and people were excited to be there, and all the stars and season ticket holders and suite holders. I think they'll do well. If the Knicks and Rangers are winning, it won't matter what the economy's doing.
Okay.
Well, I was going to say, as a 25-year Brooklyn Nets franchise season ticket holder, I'm not sure about that one. But no, look, without giving maybe a specific name, we really like how opportunistic credit assets can weather a storm. So you might be talking about buying debt at 60 or 70 cents on the dollar. Often in an upside case, you get paid par. In a downside case, you might take control of the asset, and that might be really interesting in itself. And so we tend to get protective and to go more into credit type assets in these environments.
Sticking with your experience in credit, distressed credit, there's more of a discussion now about how creditworthy is the United States government as a borrower. Obviously, a bunch of bouncing around in the bond market, some concerns about that. If you were, buying a credit default swap on the U.S. government, you think about 3 months, 6 months, 12 months. Not so much that it's going to stop paying its bills, but that there are going to be more questions around its creditworthiness. How do you think about that?
Well, I think there are going to be more questions around our creditworthiness, and I'm not sure it's just related to the fiscal deficits that we've had, that people are at least starting to talk about. I'm not going to say there's been as much of a fight against it as there could be, but certainly starting to talk about. Look, I happen to have been overseas right after April 2nd, and for the first time, I was getting asked questions about the U.S. government's intentions by international related investors. So, I mean, there's a confidence game to all of this, and the U.S. has been the reserve currency for a very long period of time, but we have not been the reserve currency forever. There's not a guarantee we're going to stay the world's reserve currency. The benefit of the reserve currency is you can keep printing money and fight your way out of any problem, but again, I wouldn't say that's guaranteed forever. So the good news is it's not obvious as a second alternative now compared to the U.S., and I think that's been part of it. But as a proud American, I hope we don't take it for granted.
But when you look I think what this administration is trying to do in certain ways is actually look at the national balance sheet a little bit, right? And say, where are the assets? Where's the equity? We got a lot of debt. We know where that is. How do you sort of monetize parts of the balance sheet? Just as someone who in the credit world, it's all about, what's the collateral? Where are the assets? When you start to think about it, does it make sense to look at a national balance sheet that way? I'll start with John.
Well, I think that, I had friends who were high up in the Obama administration, people who were involved with all the economic policy, and they often said that the assets were not really accommodated for appropriately. You think about all of our assets, whether it's our Grand Canyon or the White House, or just so many things that are out there that are a part of our nation that really don't get counted. And it's sort of, when you think about it, the value of those assets have grown and compounded over the years. And if you ever did sell them or find a way to monetize them, it could have a meaningfully positive impact on our debt.
But should we? Should we sell the Grand Canyon to the highest bidder?
I'm sure there are a lot. I don't know about the Grand Canyon specifically. I've flown over it once, I think, but I think there are a lot of assets like that we probably could find a way to privatize. You know, in Chicago, we've done a lot of privatization. Some of it worked, some of it didn't. Parking meters didn't work, but our Skyway was phenomenally successful. You know, as we know, there's lots of ways you can sponsor things and name things. I know we have Ken Griffin coming up, and our Science Industry Museum is named after Ken Griffin because of his enormous generosity to our city. Well, just think about it. We have Buckingham Fountain in the middle of our city. You've got Lake Michigan. What would be the value if you had
Lake Ellison,
right.
Lake Musk? Like, is this where this ends?
It could be.
Tony, what do you think? You're a credit guy.
I'll give a slightly different answer. I don't think government credit is a balance sheet story. I think it's a cash flow story. And so I think you need to look at stats of like debt to GDP, how much of the operating budget of the government is taken up with debt service. We obviously have other very large entitlements that we pay out as the U.S. government, which are kind of harder to move around. I mean, when you see debt restructurings of governments, and so whether it's like the city of Detroit or Puerto Rico, they tend to look around what's the actual debt service that the entity can support, and how do you reorganize your debt or push out your debt to service that. And then sometimes you wind up with situations where creditors get things where the better the health of the finances of the reorganized city, the better they're going to do. So like Argentina did that, for example, many years ago, and people did very well in that stuff. I don't see the U.S. ever monetizing something like the Grand Canyon, but I will say that just because a government owns assets doesn't mean the government is always the right owner of those assets. I mean, obviously national treasures we are going to always want to keep, but there might be office buildings or other things that we own that quite frankly might be better off in the hands of third parties, and sometimes there's lands that the private sector can do things for that's good for everybody. So I don't think it's a crazy exercise to look and see what we have that's not being maybe utilized to its fullest tilt compared to the private sector. You know, that's going on in New York with stuff like Governor's Island, where it's owned by the city, but they're trying to figure out ways to make sure it maximizes its potential. But I don't view those really as related necessarily. I mean, ultimately, we're operating under the full faith and credit of the U.S. government, and I think that's what's the most important part.
Yeah. But one idea seems to be sort of the Mar-a-Lago Accord idea that's floating around a little bit, where we ask creditors, other countries, we'll take their short-term government debt and we'll give them kind of forever bonds. And if a borrower came to you, a corporate borrower came to you and said, we don't actually want to pay the bonds that are due next month, but we're going to take those and we're going to give you bonds that are due never. Wouldn't that terrify creditors?
Well, so in our world, that's called an LME, which is a liability management exercise, and it's considered a selective default, right?
It is a way of saying
that is considered a
bankruptcy.
default, like the government has impacted its debt. So yeah, I mean, it doesn't terrify creditors in high yield markets because people have gotten used to it, because 90% of the debt in high yield markets has little or no covenants in it at this point, but it's not considered a good thing. I actually do think that the U.S. government terming out some of its debt is a really good thing, but it has to be done on a voluntary basis, not on an involuntary basis.
John, what do you think?
I think that sounds right. You're the expert in that area, but I do recall, when the S&P downgraded the United States, it didn't really make sense when you again looked at all the assets of our great nation. The fear that took over during that period was not appropriate.
Ariel has been around for a long time and talked, before it was a thing really, about impact investing, investing with purpose. In addition to its excellent returns, I think in part has been known for being led by two of the most senior Black people in finance, yourself and Melody. I'm curious, have you changed either sort of how you've invested around ESG or really how you've talked about it, how you found that investors of your own and other stakeholders want to engage with that topic, or even just the phrase?
Well, I think that there's obviously a lot of pressure right now around these issues, but our values are still the same. And we believe it's good for shareholders to think about these things in the right way. There's lots of examples of, we all know things that are going on in the regulatory environment, that the problems and trouble you can get into with your company if you are not really respecting the regulatory environment that you're in. And so the risks sometimes the companies have taken by not following the rules effectively, we help the small and mid-sized companies that we invest in to make sure they're ahead of the curve so they won't get nasty surprises that could impact their balance sheet. We also, of course, are well known, as you suggest with Melody Hobson, of pushing for diversity in management and diversity on boards. And I think it makes sense that I'm a part of the University of Chicago family, and the late President Bob Zimmer would always say, when you're searching everywhere for great ideas and getting different people to come in with different perspectives, you make better decisions. And of course, coming from Chicago, Reverend Jackson often talks about how baseball became a better sport when Jackie Robinson started to play, and Willie Mays started to play, and Hank Aaron and Ernie Banks started to play. The sport became greater, and they all went to the Hall of Fame. They all won World Series, except our poor Ernie Banks. But these were excellent players who were not allowed to play. They were talented in 1940 and 1935, but they didn't have a chance to get on the playing field. So I think if you search everywhere for talent, there is talent everywhere, and it will make your team stronger when you just don't look at people that you're comfortable and familiar with, but when you stretch out and look for talent every place.
When you talk to a lot of CEOs, are they changing the way they are approaching diverse talent, or are they just not talking about it? They've taken it off their website?
I think most companies are still working on it and focused on it. I mean, there's some management teams that probably never believed in it, and this has been an excuse for them to drop it and move on. But I think most people understand that, their customers are also becoming more diverse. The young employees are becoming more diverse. They realize that they're going to be a with-it company. They've got to see this and do it the right way. I tell the companies we invest in, if you look like a 1940s company in the 21st century, it's hard for us to invest with you. So I think management teams get it for the most part, and they realize the lawyers are telling them that they have to change. And it's interesting to me, Donald Trump doesn't like lawyers, but he's making them all very rich these days.
Well, in the Lawyer Capital of America, they thank you down here. You both actually have interesting side jobs, and John, sticking with you for a second, you're on the board of Nike, which got just absolutely walloped that on Liberation Day. I think it was down 15%. Understanding that Elliot runs the company day to day, but as part of the board, trying to plan long term, have a sense of where this is going. Supply chains are incredibly complicated. They have now been scrambled twice in 5 years. Nike was actually early kind of to diversify away from China, went to Vietnam, and then bam. So maybe you can give a little perspective on sort of how you think as a director about sort of setting long-term trajectories for businesses that are pretty capital intensive, pretty labor intensive, pretty hard to move around.
I think we can't talk specifically about the earnings of Nike, but I would just say that Phil Knight created an extraordinary culture and values that are still there. The people are so competitive, so dynamic, so committed to winning. It comes from Phil Knight directly. He also put together an extraordinarily great board. When you think about it, on the one hand, you have Tim Cook, as a lead director, but up until he passed away, the late John Thompson, the coach of Georgetown, was on the board. Who does that? Goes out and searches for that kind of talent, and people who are making sure that we take all of these challenges seriously and have the best governance possible to make sure we have the right leadership at the right time to keep us a great, great company. So I'm totally confident and comfortable in the values and culture there will bring us back to winning again and doing extraordinarily well. And the swoosh is such a magical brand. I'm a true believer.
Tony, you're you're an alumni of Princeton and are a trustee in the endowment there. Your president has been pretty outspoken that he's not going to knuckle under, and I'm curious if you're heartened by Harvard's moves, sort of where you see this discussion going.
Look, I mean, I'm a very strong believer in academic freedom. And I think that the public-private partnership between the universities in this country, and by the way, the best universities in this country are typically the best universities in the world, and how they work together to produce leading cutting-edge research, whether it's in the medical field or it's in the climate field or in many other fields, has been super helpful for both the US government and for universities over a very long period of time. And so it's very disappointing to me that this is being used as a bludgeon, and I'm not speaking specifically towards Princeton, I'm just making this as like a general statement in terms of trying to offset cutting edge research. And by the way, the repercussions of that may not be known for years, but could be massive in terms of what happens if professors who are doing cutting edge things lose out on this. I mean, the MNRA technology was invented at the University of Pennsylvania, right? What would have happened if that hadn't gotten funding because of something or other, right? What would have happened during COVID? So we're very supportive of what Chris is saying. He's been on a couple of different news publications, both in print and on podcasts, speaking about this. And I think it's really important that we protect academic freedom, and on a bigger level, just to protect these jewels that I think are the envy of the world in terms of the research and the teachings that they're able to do. It's why we have so many international students coming to these universities in the US, because it's the best and brightest in the world who want to attend them, not just in the United States.
But I think there's going to be an announcement on some very hazy at the moment executive order this evening on endowments. And it's not hard for me to imagine a bit of a nightmare scenario where you end up with those foreign students who are, mostly pay full freight, being sort of perhaps not allowed to come. There's some DHS rumblings on that, where you have tax exempt status being challenged, where you have some of the endowment investments themselves, perhaps things in China or other things the government doesn't like. At the same time that you have this big funding gap. And I don't know, I'm curious, when you look at this investment fund that you're a steward of, that's going to have to fund the university and probably be called on to write a bigger check than it used to, like, what do you do?
Well, I mean, so you may know more about this order coming tonight than I do. So I guess we'll see what.
I don't think anyone knows much about this order coming tonight.
What actually comes on that. I mean, one of the things I've learned, because I sit in the board of a major hospital as well, which also has relationships with two large medical schools in New York City. Each university has its own funding model. They've got their own asset funding model and their own liability funding model. So first of all, while many schools have most or all of their international students pay full freight, that's not necessarily the case at all schools. There certainly are some schools, Princeton would be included in this, that provide scholarships for international students as well. There are some schools, particularly those who have large medical schools attached to them, where the government accounts for a significant portion of their operating revenue. It could be 40 or 50%. There are other schools, Princeton does not have any professional schools along those regards, where government funding is actually quite a small portion of it, because it's just not necessarily where funding is coming from. And then you mentioned endowments, and it's definitely true. I mean, I think one of the things that's really up for debate out there is what used to be called the Swenson model or the Yale model, which was basically take on as much illiquidity as possible in your endowment, because you're going to earn the highest returns that way. Like, that whole proposition in my mind is like in question, not because of anything the Trump administration is doing, because the markets have spoken and markets are efficient, and it turns out that private assets are not inherently required to earn a higher rate of return than public assets. Sometimes public assets might actually earn a higher rate of return if everyone's chasing private assets at the same time. So I do think each of these schools has their own mix of how much of their budget comes from the endowment, how much of their budget comes from the government, what do they have to do. There are some that are in better or worse shape for it. I think it's not a one-size-all-fits answer, but I come back to the general proposition that this university research system we have in this country is literally the best in the world, and it would be a shame if we disrupted that.
I would just add quickly that that's all very, very important. I think it gets discussed you discussed it very, very well, described it very well. I think the thing that's also missing is, in a place like Chicago, the University of Chicago employs thousands and thousands of people, and huge jobs, nurses at the hospital, the teachers, the professors, all the people that are there that are part of that ecosystem. All the people who stay in Chicago and become professors and the like because they love the institution. We got DePaul, we have Loyola, we have Northwestern. These are anchor institutions in our urban cities. And so if they fail because of this attack, it's going to have a profound impact on unemployment and the ability for people to have working wages and be successful in their urban communities. So I think that's a big, important challenge that we have to address here also.
Yeah, we'll be looking at the April unemployment numbers very closely, I think, because March didn't tell us all that much. Listen, that's all the time we have. Thank you both so much, and thanks everyone for coming.